Welcome everyone to our podcast where we break down some key metrics that can really help you spot a winning stock. Today, we're diving into 5 performance indicators that signal a company's potential.
I'm excited about that. What's the first metric you want to get into?
Let's start with revenue, the growth engine. Think of it as the raw horsepower behind a company. If revenue grows by at least 10% year over year, that's a big indicator customers are really buying
Yep.
in. It's like a gauge telling you, hey, demand's strong.
So if a tech firm hits 110M from 100M, that's a thumbs up, right?
Exactly. But it's important to look at trends over 3 to 5 years. A one-off surge, maybe from a one-time event, can be misleading.
Yeah, consistency is key.
Next up is profit. Now, revenue might be booming, but what really matters is the net income after expenses and taxes. A steady 10% plus growth in profit shows that the company isn't just making sales, it's actually keeping more money in the bank.
Right, profit tells you if the company can effectively manage its costs. But what about free cash flow?
Ah, yes, free cash flow. Think of it as the lifeblood of financial flexibility. It's the cash left after operating expenses and capex are handled, which can be used for dividends, share buybacks, or, new projects. A consistent rise here, over 10% year over year, indicates not just paper profits but real liquidity.
Got it. Essentially, it tells you if a company has the cash to invest in its own future or reward shareholders, right?
Exactly. Now, jumping over to book value per share or BVPS. This measures a company's net worth per share. When you see a consistent 10% rise, it suggests that a company is accumulating value, assets growing faster than liabilities. It essentially acts like a safety net for investors.
That's interesting. It's kind of like seeing the company build up its cushion, which is a good sign of stability.
Precisely. Last but not least, there's return on invested capital, ROIC. This is a real efficiency champ. It tells you how well a company is using the money invested by shareholders and creditors to generate profits. When ROIC grows by 10% or more, it shows that every dollar is being put to work
Right.
effectively.
So, putting it all together, if a stock is hitting 10% plus annual growth in revenue, profit, FCF, BVPS, and ROIC, it's something like a unicorn in the stock market.
Exactly. It's like finding that rare gem that not only has momentum in sales, but also is efficient, cash strong, and building up its value over time. Numbers like these, over a period of years, can really set a winning stock apart from the rest.
But wouldn't you say that sometimes focusing solely on these metrics might miss out on qualitative factors like management or market trends?
Absolutely, I agree with that. While these numbers provide a strong quantitative foundation, you definitely need to consider the broader picture. Industry dynamics, competitive positioning, and the quality of management play crucial roles
Yep,
too.
totally. So for someone just starting out, digging into 3 to 5 years of these KPI trends would be a smart move before diving into a stock.
Spot on. It's all about ensuring that those numbers are consistently hitting that 10% mark. If they are, you're likely looking at a company with real growth potential, not just a flash in the pan.
Great insights. It's like when you're checking the engine and the fuel gauge before a long drive. You want to make sure everything's in tip-top shape.
Exactly. So, if you're investing, use these KPIs as your anchor, sift through the noise, and remember, as much as numbers tell the story, the context behind them is just as key. Thanks for joining the discussion today.
Always a pleasure. Till next time, keep digging into those financials and happy investing.